Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that closed in play on Wednesday. Okay, so first up is SRAX. Okay, very nice move here. It is hitting the overbought power zone on the RSI and Fasto. You've had a bullish crossover here on plus DI. So the big move was the break and close above high close October resistance here on the 17th. That was the key level to close above, and that did happen today. So this is a nice multi-day run with a big giant volume spike on Wednesday. If the candles do work back into the bands, you want to see this level turn into support. That's at about 490 or so. And then just below that is EMA 4 at 465. If that level holds, this uptrend is super strong. You know, a new uptrend started with the break above the middle Bollinger Band. The candles are currently trading above all the moving averages. So this is a nice uptrend. You've got the MACD bullish crossover on both time frames, a recent PSAR bull flip, and so yeah, and then see the golden cross here with the 50-day simple moving average crossing over the 200-day simple moving average. And so when a stock's breaking out, the key is to look at a longer time frame to check out where the next resistance levels could be. And as you can see here on the weekly chart, this is this week's candle, and it will not set until the closing bell tomorrow on Friday. It's currently hitting the 200-week moving average at 586. That's the red line. It needs to close above that level for the week and turn it into support to head higher. If it fails to close above that level tomorrow, it could signal a temporary top, similar to back here in October when the 100-week simple moving average was hit and failed to close above, and then the candles consolidated and pulled back into the bands, because this week's candle is above the upper Bollinger Band. So working back into the bands would put the share price at the 100-week moving average at 484. That is the key level to hold and turn into support on the pullback. So a close above the 200-week moving average does signal more upside potential, and then we'll be talking about 7 as the next key zone to break. Notice that there's huge volume behind the move this week. Take a look at AMPE. This is another stock breaking out. So super sweet move. Congrats to everybody following our charts and technical analysis. This has just been a really nice uptrend since the middle Bollinger Band turned into support back here in August. Notice how the candles got above the middle Bollinger Band and the 50-day simple moving average. Then they turned the 100-day simple moving average into support. And then finally in October, the candles got above the 200 and 300-day simple moving averages. And then here on the first week of October, the candles are above all the moving averages and riding EMA 4 support higher. That's as bullish as it gets. This ascending triangle pattern formed. We had put out this chart saying that we are looking for a close above the closing price on the 18th to signal more upside potential. That did happen on the 30th, so that was a clue that it was setting up to break out higher. Finally, you know, it worked. It took several, days, a couple weeks to finally get above that level. Notice how that was major resistance, and then finally once at 115 turned into support, it broke out higher. So now you have the big push. Sometimes plays just take a little bit of patience. This is still was a solid swing trade, because if you look at the dotted purple line, this has been holding the entire time. That's the middle Bollinger Band at 122. As long as that's holding and you're a longer term swing trader, you can keep riding. And so the break above 135 signaled more upside, and now it's pushing really hard. An upper wick did form on Friday's candle, a pullback from the 190s, and there was a big volume spike. So we need to see if that's going to signal the candles, taking a pause and the candles working back into the bands. Once again, we need to look at the weekly chart to see where this is headed. And so I was going to show you another chart. I didn't want to show you too many, but we had put out alerts after this chart. So first we put out this chart, this weekly chart, show it. This was like a reverse cup and handle, where you had the smaller, this should say handle here. You had the handle here and then the cup. And then this was the neckline, and it broke above here in October, and that signaled it wanted to head higher. And so we had put out another chart saying that we are looking for a close above this June close. That would signal more upside, and so that happened last week, and it also closed above the 100-week moving average. So that close above the June closing price and the 100-week moving average, that signaled more upside potential. And this week there was nice follow through with a big push higher. So as you can see, there was this big drop in June, so there's not a lot of resistance there. There's going to be resistance here on this prior support. support level, and so notice how the candles hit that level and pulled back. So it's going to have to break above this prior support level from back here in February, and if it can, the next key resistance level to break and target is going to be this 200-week moving average at 257. This is the target zone, this 200 and 300-week moving averages. That's where it looks like this is headed. It might take a pause on the way up there, but look how strong this uptrend is. I mean, ever since this close right here in September above the middle Bollinger Band and above EMAs 4 and 8, the candles have been riding above this pink line, above EMA 4 the entire time, every single week. These are all weekly candles. So this has been going on for multi-months. You could have loaded down here. This was the start of the uptrend and still been riding. There hasn't been a signal to exit on a longer term swing trade until there's a close below that EMA 4 level. So, this has been a very nice trade. If you look here at EMA or at AMPE on the 15-minute chart, you'll see it made this explosive move on Wednesday. It broke out on really big volume, and it was pushing super hard. Finally here at 1:30, a red candle formed off of high of day. You had the climax spike. This was the high at 1 o'clock. Notice that it also had the largest volume bar. That was followed by the pullback from high of day and the red candles, working back into the bands. The close above EMA 4 signaled it was consolidating. It did hold the middle Bollinger Band. That's the big level, currently at 1744. As long as that holds, this uptrend's intact. If it closes below, if you see it break below that on Friday, it could drop down and test this 50 simple moving average at 154. That's the downside risk. To the upside, if it can break above this 190 level, that's going to signal it wants to head higher. So 190 to the upside, 174 to the downside. You don't want to see it break below. If that happens, it could drop down to 154. And then, yeah, so very sweet move for AMPE. Let's look at URG here. This is another stock that made a really nice move on Wednesday. It came up and it filled the jar. We were looking for a move back to the closing price here on July 19th. This is a chart that we posted before, and so it finally, it hit that level and actually closed above on Wednesday. Congrats, everyone. Notice how it had the double bottom down here. We posted the double bottom chart. So it's been heading higher ever since this double bottom. It's not the huge percentage gainers. But it has gone from 50 cents all the way up to 72. So that's a nice 50% gain in a few weeks. That's not bad. It's a very nice move. It's above all the moving averages. The middle Bollinger Band, the 50, 100, 300, and 200 day simple moving averages. It's riding EMA 4 support higher. Super, super strong. The jar is filled now. So this is complete. It has to stay above 72 now. If it stay above 72, that's going to signal it wants to head higher. If you look here at the weekly chart, so once again, this is a weekly chart. Each candle represents 1 week of trading, and you can see this week's busting through the upper Bollinger Band at 70. The next big key level to break is the 200-week moving average at 76. So if it can get above that, then you have the closing price on the high close in February, and then the 300-week moving average at 84. Those are the two next targets, 83, 84. If it can get above 76. Notice that the bull crosses on MACD are signaling the possible new push higher along with the P-star bull flip. And you still have RSI at 63, so it's not at overbought levels yet. So there's still juice in the tank to keep pushing this baby higher. So it looks like it wants to head up to the 80s. So take a look at NOG. This is another one. It's not so sexy as some of these other plays that are producing the big percentage gains, but these are solid. These are solid gains as well. Notice how it had the big push up here to 140, and then it retraced. It held the EMA 13. It came down and almost tested this 100-day simple moving average zone. Notice how the lower wick on Tuesday's candle bounced right off of the middle Bollinger Band. That was perfect. That's exactly what we wanted to see. And now the candles are back above EMAs 4 and 8. Notice it has the higher low, higher high. It has this uptrend going. The candles are above the middle Bollinger Band. You have the 50-day simple moving average set up here to cross the 100-day simple moving average. That signals the chart's heating up. Notice the volume spike. So volume was picking up in the move above resistance. You've got, you want to see the MACD line stay above the signal line here. And then on the 8, 13, and 5, you want to see that black line, the MACD line, cross over the signal line. RSI is in the bull zone at 62. You want to see Fasto get back above 50. The target here is to retrace back to the November 6th closing price, basically at about 134, 135. That's the target if it can hold this middle Bollinger Band level. Okay, look at RPRX. Okay, so now it's back above 50 on RSI, so the chart's heaving back above 50 on Fasto. So the last time it did that was when it made a run. Notice back here. So it's heating up again, and so the move and close above this green line, the 50-day simple moving average, and above the dotted purple line, the middle Bollinger Band at 0.448, is signaling a possible start of a new uptrend. It needs to stay above this level. It needs to hold this 44 to 45 level, turn it into support. If that happens, our target's going to be up here at the 200-day simple moving average at 65. It's going to have to get through the upper Bollinger Band at 55. That's going to be a big resistance zone. So keep an eye on RPRX for a new uptrend starting. Notice it's really light volume. Keep an eye out. You want to see a volume spike and this thing start heating up. You want to see a bullish crossover on the 12, 26, and 9. The 8, 13, and 5 MACD is already crossed over, and there was a PSAR bull flip on Monday. So this chart's really heating up. Keep an eye on RPRX. Okay, CLNT. Okay, this is the dreaded black candle. If you were, got in this pre-market and you were chasing it and it started pulling back, on this black candle, the big thing was to try to exit as soon as possible. The black candle signals possible dilution. It signals shares being sold. The big pullback. In black. When you have a gap up open above the upper Bollinger Band and the share price starts pulling back like that, the safest thing to do is just go to the sidelines. Now the key level to hold is this closing price on the 9th, 650. Okay, so now there's a gap between low of day on this candle and high of day on this candle, and so the bottom of the gap is way down here at about 460 or so. So you really want to see EMA 4 hold at 554. The candles could work back into the bands. Keep in mind, the upper Bollinger Band is rising, so it could meet up there at this level. You want to see 650 turn into support. So yeah, always be really careful when you see that black candle form after a gap up open. Okay, take a look at ARLZ. Okay, so you want to see RSI get above 50. It's right there on the 50 line. There's a bullish crossover on Fasto. It's now above 20. Okay, so there was a nice bounce down here. Notice that this has a symmetrical triangle pattern. There's descending resistance, ascending support. One of these two lines are going to break. If it drops below here, if the 100-day simple moving average, that gold line fails to hold, and it drops below this ascending support line, that's going to signal the chart's just broken. It looks like it wants to try to head higher here. It's been making higher lows. So here's a series of higher lows. Each time it's pushed up, it didn't get as high this time, right? So it came back down. So what it needs to do is get above this descending resistance line. If it breaks above that, then it could run up here to 277 and test the 300-day simple moving average, and then test the closing price on the first trading day in October. These are the big levels: 260, 267. Okay, so it closed above the middle Bollinger Band. It's heating up. It held the 100-day simple moving average. What really needs to happen is it has to get above this 200 and 50-day simple moving averages. If you can see it close above this 175 and 181 level, close above this red line at 181, that's going to be super bullish, signaling it wants to head higher. Okay, so take a look at CYTX. Okay, this is heating up as well. You've got RSI here. You want to see it back above 50. Fasto's back above 50. It's back in the channel. Notice it was in this, so it had the gap down back here. Back here in July, there was a gap down. It pulled back. It had this basically long sideways channel between 35 and 40, between 35 and 42, in that range. It's right back in that channel again. The top of it is right here at 41.6. We'll call it 42, where the 50-day simple moving average is. It's hitting the middle Bollinger Band currently at 39. And so if you can get above 39 and 42, that's going to signal it's back in play. If you look here in October, when it got above those levels, it made a nice run from 35 all the way up to 90 cents, so that's why we're keeping an eye on this play. These stocks tend to repeat and and have runs after they pull back. And so we're looking for the next run here. The break above the 50-day simple moving average, similar to like what happened here, should be the signal it wants to get going. Once it gets above this 100-day simple moving average at 49, it could really take off and get back up here. Notice when it hit the 100-day simple moving average in October, it pulled back and signaled the top. If it closed above the 100-day simple moving average, that would be a bullish change in trend. And then keep an eye on NXTD. This will be the last video in this chart. And so yeah, this is in a nasty downtrend. The reason why I'm showing it to you is this volume spike. So you had the lower wick here on Tuesday, you know, and there wasn't a big spike, but check out the big spike on Friday or Wednesday. Huge volume spike on Wednesday, and there was a close above the EMAs 4 and 8. That was the first close above those levels since back here on November 6th. So the chart's heating up. You know, it could run back up here to the middle Bollinger Band. That's the top of the bearish downtrending channel. It's been in a downtrend since support broke back here in September, and so it's been trying to get back above the middle Bollinger Band. We're going to see if it can retrace back to that level, and there is a gap on the chart between these two candles, so it could come up here and try to fill this gap. You know, that volume spike is signaling that people are you know, bounce players are possibly going to push this thing higher, and so this 150 level is a really big level. This is the bottom of the gap. If it can bust above 150, it could possibly run up to 170 and fill that gap. So keep an eye on NXTD. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. And then please come join our chat. We have a new chat there. You know, I can get you into, you know, just go into the chat, you know, we have an invite there on the website, and then send me a message and I will send you a link into premium. Okay, so yeah, and come check it out. We've got a lot of cool stuff going on. All right, thank you.